Hi, good afternoon. You're watching Closing Trades right here on ET Now with me, Aisha Faridi. I've got Shrishti Sharma also in the studios, and we're coming to you live from the SBI Live studios. But Citi has been calling the government's GST revamp a potential game changer. The move could trim inflation by up to 1.1 percentage points, though the actual impact may be smaller with a partial pass-through. But what's the fiscal math looking like? Will revenue loss be offset by higher demand and compliance, as the government is expecting? We've got none other than Sajid Mangat right here in the studios. Sajid, good to have you on ET Now. Welcome.
Thank you very much.
And what a day to welcome you to ET Now. What a day to be here.
It's a good day to be here in ET Now.
Yes, and what a big bazooka, Sajid, from the government. I mean, you did get a hint and inkling when Prime Minister Modi announced that on the 15th of August, and it's here. One-day GST Council meet and all of it got announced.
Yeah, and that too a truncated GST Council meet. It was supposed to be 3rd and 4th. Now they completed everything on the 3rd, which shows the kind of consensus which has been built up in the GST Council. But more important, they've taken some bold measures, which is there, especially with respect to insurance, which is a much debated subject. And I think we had guests during the show, in today's show, which spoke about the fact that the concerns about input tax credit is not that much, because hospital rates are also going to come down in that sense. So the pass-through could be much more. But the markets have been very flat, and one of the reasons why it is that way is the expectation that the pass-through may not be entirely which will go to the consumers, and that's what is one of the things. And I'll tell you a reason why for that. The reason being, in the last 2 to 3 quarters, we have seen inflation stepping into the P&L of many of the companies, and that's impacting their margins. And they've been not able to push price hikes, primarily because the consumption was very slow, and they didn't want to push it. So now that you have a GST cut which is coming in, many of the companies which were sitting on margin impact may try to cushion their margin, and that's good for some of the companies, but bad for the buoyancy which the government is talking about. 48,000 crores is something which the government spoke about, that it could be the revenue forgo based on the 24 numbers. But I think Citi is looking at a revenue decline of nearly 93,000, and then there is a gross revenue boost because of buoyancy of nearly 45,000. So on a net basis, there could be a implication of roughly around 57 to 58,000 crores. That's the kind of a buoyancy which they are looking at. The deficit they're going to look at. But as the revenue secretary mentioned yesterday repeatedly, there is going to be a buoyancy in the consumption, and that buoyancy will come in only when the entire pass-through will happen. So I think there is a little bit of concern with respect to pass-through of this price cut, and also the fact that it has been pushed to 22nd, being the Navratra days, but from now to 22nd, people will wait for the cut to happen before they can buy. So, ideally it should have come much earlier, but
it wouldn't have, because you've got Pitru Paksh, which is Shraddh, perhaps.
But that's
why we would have
northern
delayed.
India, right? In the southern India, we are going for festive season now. Yeah. So in Kerala and Tamil Nadu and other areas, there are festivals. Kerala is going through an Onam festival, which is one of the biggest and the first festival to start off the entire for the country. And if you ask some of the FMCG companies, the trend setter for the entire country for festive season is the Kerala Onam, because and Kerala is a consumer state. It's not a manufacturing state. Yeah. So from that point of view, it is it's delayed. So you miss the entire buzz with respect to some of the southern states or some of the southern festivals which are coming in. So I think that could be one of the reasons why it's a muted response. Of course, over a period of time, it is rationalization into 2 rates. That's very good for the economy as well, because it brings in a lot of cash in the hands of the consumer. But look at the government has been doing its bit with respect to that tax cut, GST cut, the RBI doing the rate cut. All of them are adding money in the hands of the consumer, and that is going to help the consumer and get the buoyancy back into the economy.
Sajid, I come to what the markets may be thinking, because you've still got a big question mark on tariffs right now. So maybe the markets are doing that balancing act. But to the individual sectors that you were talking about, wherein they do still see margin pressure, perhaps, irrespective of the GST cuts, and maybe the pass-through may not happen as quickly. That's staples largely?
True. That could be the staples, but White goods are going to be beneficial because I think across the board there has been a shift from
rationalization.
so that has come in. Small, I think the disappointment for some of them would be the cars kind of thing, because they have retained the classification of 1200 cc and 4000 mm as one of the criteria for small car, and above that everything goes into the medium and others. So earlier, if someone wanted to buy a compact SUV, now you're paying up to 40% for that, in that sense. But for someone who's buying a luxury car, for them it's coming down from 50 odd to for 40% in 40 odd. So yeah, so that's a mixed thing. Packaged food is good because they have on food they have removed. You had all the parathas and everything which was being taxed at a higher rate. Now all has gone. So from a consumption point of view, it's very good there. Toiletries are going to good. So HUL and others, Marico, Godrej, and other companies are going to benefit in terms of rates coming down. But that's where also the partial passover will also happen, right? Just because the rates have come down, you will not buy 2 soaps. You will just buy
or not have more salt.
Simple as that. So it's a pass through which so those are the areas where the pass through may not be fully there, and that's going to be something of an importance for them.
So Sajid, when it comes to really staples, let's pick up that part of the market firstly. Is it going to be a volume game or is it going to be a margin accretive game? How should you be looking at those companies right now from an investment perspective?
It's not going to be a price cut. It's going to be a volume game in that sense. And I'll tell you because for the last 4 to 6 quarters, what we have seen is the price has remained the same and the shrinkage has happened to the volume.
Yeah.
Now it's going to be going back to it. They keep the price at the same price point and then they will increase the grammage for many of the items. And that is something which is going to be important because that's how the companies are going to do it. And that's also one of the way of confusing the consumer as well in that sense. So it's not going to be, price cut. It's very difficult for companies to bring up the price once the price is cut. It's so they will increase the grammage and they will not go for a price cut in that sense.
But Sajid, to the point that you were making, that there's still a lot of uncertainty around with respect to how this pass-through will happen, or rather this transition period, what the companies will do. And case in point being autos, because just before that festive season, everybody is all geared with that higher inventory and ready with just to offer the consumers. For now, we have already seen Maruti Suzuki, some of these two-wheelers, they have done well. Today, M&M is the top gainer since the start of the day. But do you believe, or rather the sense that we are getting is that in the near term there can be some blips for the auto sector?
From an inventory point of view, yes, because but I should tell you that because the Prime Minister announced it on August 15th, the damage is not much. Because people who were, especially the auto sector and auto dealers, they go for vehicle financing and there is no credit period that they get. So they do the financing, and so the financing has not been much in that sense, though they're sitting on 40 days. But during festive season, it can go up to 65 days of inventory which is there. So yes, there is an impact, potential impact for them. That impact would be borne by the industry as well as the dealers, which is going to happen, and that could be one of the reasons of saying that okay, how much of pass-through will happen of the rates, because they will say okay, we are giving discounts and that discount has been borne by us for the inventory which is there. Though the rules for those things are going to come in, I think CBIC will come out with the rules of how to manage the transition, because you will have higher input tax which is there, the GST will be much lower, and many of this entire inventory will be sold after September 22nd.
Mean that the long-term road for the auto sector is very much positive, because we were just chatting with Mr. Bhargava, and he did upped his guidance apparently for the small car, saying that 10% growth is likely for the industry, 7 to 10% growth is likely in the next fiscal. So after that near-term blip, do you believe that the markets will start pricing in that growth number?
It's also a factor of uptrend in buying, basically, right? Means small cars have not been selling much. I think except in the month of Feb or March, when we saw a brief period where the cars for small car sales went up, it has been falling. Now, assuming that a car sale with a car price of roughly around 6 to 8 lakhs, a 10% hit would be 60 to 80,000 rupees per car, which is there, which is a huge amount, right? In that sense, and I think 80% 80 to 90% of the cars are financed in that that region. So you have a couple of things which are going for the small cars, but the question is that will a person now go for a small car, or will it upgrade to about 10 lakh car, which is there? Because there are multiple factors coming into being. One, you have the tax cut which has come in, which gives you roughly around 8,000 rupees per month. Then you have a rate cut which is roughly around 100 basis point which has happened, and another 50 basis point rate cut is expected to be there in the next 3 to 6 months, which is there. And then the third is the GST cut which is coming in. Now all this is adding roughly around 15 to 20,000 per month in the hands of the consumer. They can easily upgrade themselves to the kind of consumption they want in a higher or a mid SUV or whatever. I mean that higher level car which is there. But it's up to, will the consumer come back to the shop? That's the question which is still there.
Absolutely. Let's talk about the one sensitive pocket, Sajid, and that's clearly insurance and the overall healthcare space as well. While there's no doubt that for policyholders it's great news, but what about hospitals? What about insurance companies?
So, I think on our channel itself, we had a couple of hospitals coming and talking about the fact that we are not going to see that kind of impact now, or some which was there, right? Earlier, your input tax credit was 15%, means 18%, and then insurance was 18%. And now if it goes to zero, what happens to the input tax credit? Now the rates have come down for many of the hospital items as well. Life-saving drugs has gone to nil almost, or exemptions have been provided. Some of the costly cancer drugs have come down. So many of the life-saving drugs which are part of the hospital bill have already come down. Exact impact would be there, but I think it gets adjusted in the premium. So if the question is that will your premiums come down by 15% or so, the answer is no. It will come down between 10 to 12% because there would be some impact of input tax which is there for the services, and that would be factored in the entire whole thing. And so 10 to 12% is the kind of price reduction that you'll see in your premiums, monthly premiums or annual premiums going forward. So it's good news for the insurance, especially on a single insurance and the group health insurance which is there, and life insurance. So going forward, yes. And anyways, this is not the quarter of insurance. The quarter of insurance is Q3 and Q4. So they're going to the maximum number of sales happen in that 2 quarters. For that, it augurs well. Whether the insurance companies are going to pass on the entire thing, or they will increase the entire minimum insurance per policy from 2 lakhs, which they are now giving to everyone, to maybe 3 lakhs or something, so that they maintain the price point. That's a thing which insurance companies have to manage figure out.
The other thing, of course, is the fisc impact also, right, Sajid? Because everyone's wondering, so close to the budget, who's going to bear this 48,000 crore rupees brunt?
Actually, it's not just 45,000 crores, it's 2/3 goes to the states. But as a revenue secretary mentioned, there will be a buoyancy which comes in, and there will be some kind of volume led growth which is coming in that. The expectation is that despite the fact that there is a tariff overhang which is there, which is creating some kind of issues with respect to sectors which are facing external or global markets, which is. So I'm of the view that there is going to be at maximum there's chance of a revenue neutrality which will come in, and the government is aware of it actually, of that. They're thinking that the buoyancy will be so much, especially with Diwali, Navratri, Dashera, Diwali, Christmas, New Year, everything coming in. They're seeing a back-ended or second half ended kind of boost coming to consumption which is there, and that's visible in some of the FMCG companies, how they're going to manage the entire crisis. Opportunity, I would say.
Yeah, opportunity. Okay, let's discuss with Ajay Bagga how big an opportunity this is turning out to be. Ajay, hi, afternoon. Thanks for joining in, and apologies to keep you waiting. We were just getting some perspective on how the markets are perceiving the impact of GST 2.0 on various sectors. But Ajay, as an investor, I guess the question is going to be, because up until COVID to now, you had only played the premiumization trend, Do you now look at more top-down approaches when it comes to consumption?
Well, I would not say that things will change very much. What is changing is it's a very structural stimulus that has gone in, and this stimulus will go in year after year now, unless there is a rollback into higher rates, which we don't anticipate. So the immediate reaction of the markets might have been muted, but what I'm expecting is that all the interest rate moves that have come in, the monetary policy, liquidity being injected, overall the income tax slabs putting on the margin some more money into people's hands. We have seen rural demand growing stronger than the urban demand. So the catch-up story the markets are waiting for is the urban demand picking up. So does this lead to urban demand picking up? We'll know in the next 2 months. But I think a very good structural stimulus has been injected by the government. What trends will it change? Will the premiumization move to a more broader based rally? That we have to see. But definitely there'll be more money in people's pockets after their usual spends. And that normally goes back into consumption. So the consumption multiplier works when you cut consumption taxes like this. So the government has got it right. There are some issues to be ironed out, like the input tax credit, then the anti-profiteering to ensure that companies are passing on these advantages to the customers. I think those two remain the issues which has made the markets muted. But if you take all this together, I think we are setting up for a good market recovery. When that comes, what is the catalyst? We'll have to wait. Maybe this is the catalyst that we will know after about 2 months when we actually see how the festive demand passes through.
Ajay, great to get in that insight from you, and thank you as always for joining in with that.
Thank you.
Okay, take a look at the markets. Completely fizzled out. We're barely, in fact, holding on to the green. Had it not been for M&M and Bajaj Finance, perhaps we could have done a lot worse. They're the ones which are really the, top contributors on the index today. But look at Tata Consumer, look at HDFC Life, BEL, IndusInd Bank, Reliance, Infosys, L&T. Those are your pressure points in trade. In fact, barely FMCG is the only sector which is actually holding out. Other than that, chemicals, infra, oil and gas, realty, technology, even financials, X of Bajaj Finance, they're all in the red as we speak right now. We'll take a very quick break. We'll continue tracking markets on the other side. Back with closing trades right here on ET now. Completely given up the gains from the top for the Nifty. I mean, to think of it, we were holding up a good almost 200 points in the green when we came into trade, and from there we're barely managing to hold our head above water. And like I pointed out earlier, the key pressure points today continue to be chemicals, infrastructure, banks, financials, X of Bajaj Finance, of course, which is the star performer today, real estate, technology, cap goods, metals. All these sectors are in the red and acting as pain points as we speak. But then again, there's a clear disconnect in what's happening with the consumption spectrum of the market. Not just a Bajaj Finance, but look at M&M. That's been the star performer today, still holding good by 6%. That's the kind of gain that M&M alone is sitting on. Or for that matter, even Apollo Hospitals. And let's chat exactly about Apollo Hospitals. Who better than Ms. Sunita Reddy, MD at Apollo Hospitals, joining in right here on ET Now. Ms. Reddy, great to have you on ET Now. Thank you so much for your time. Firstly, I wanted to understand, how is it that you see the recent tax cuts impacting healthcare affordability and patient demand at Apollo Hospitals?
No, certainly. I think if you look at the earlier budget where there was a tax cut, this has put more money in the hands of the consumer, and therefore will increase demand, will increase consumption. From a healthcare point of view, we have to first look at the insurance, which now is really 45% of payer mix. This should increase dramatically. Because of the GST removal, it should make healthcare insurance policies much cheaper. This, coupled with 100% FDI into insurance, should enable insurance companies to grow and to really have larger risk pools for them to manage. So this will create access into corporate hospitals, and we do believe that this is a great enabler for healthcare. Moving down to focusing on issues on day-to-day spending issues, the rationalization of GST on life-saving drugs is very welcome and much needed, because it's moved now from 12% to nil, and on some from 5% to nil, and on the rest it is 5%. On all other medication it is only 5%. So this is definitely good for consumer, good for the industry, and we welcome it. The reduction in medical devices, consumables, reagents, again moving from 12 to 5, is definitely going to impact the cost of healthcare. Cannot come to you with definite margins at this time, but it is a welcome step towards affordable healthcare. And we at Apollo Hospitals are extremely happy to see this measure. The most important thing is also the outlook on infrastructure. So hospitals like ours are in expansion mode. We are building out new hospitals. So with this, the reduction in GST on fly ash bricks, cement, granite, marble, all of this should bring down the cost of construction. And this is crucial for India's healthcare industry today, where we need to create new beds. And the cost of creation was going up tremendously in terms of both because of land and construction costs. So this rationalization will help us build out more beds at a lower cost. So on the whole, I think this is very good for the consumer, because even in terms from food products onwards, it's really putting more cash in the hands of the consumer. It's creating access for healthcare. It's enabling healthcare to be more accessible to consumers and patients.
Absolutely. It's a wide range of benefits. But let me pick it
Yes.
up one by one, Ms. Reddy. Because
Okay.
you too have presence in insurance, right? Via Apollo 24/7, which is an
Yes.
omni-digital health platform, and many other tie-ups as well. How does life change in that? And now do you go more aggressive into insurance?
We have to. I mean, it should have, just as when you buy a car insurance is mandatory. Health insurance should be mandatory, because there should be some health coverage for everyone. This is both a necessity and and a need. So we will continue doing what we do in 24/7, which is insurance broking, creating new products for consumers. So we look at not only offering services, but how do you pay for services? And I think that's 24/7's journey. And broking of health insurance is part of a very significant part of what they do.
Absolutely. Any new innovative products that you're already looking at?
We continue to look at new innovative products. I think the team is doing so.
I also wanted to understand, at a time like this, does it do these GST rationalization steps by the government also make our hospitals more competitive and thereby impact international patients too and more influx from there?
Yes, definitely. I think that, we're already at 1/10 of international cost. So just being able to offer services and offer value, clinical value at this price is really going to attract more international patients to India. It's definitely a $10 billion opportunity and a window that, we should really be aggressive about selling the Indian hospital service, healthcare services overseas.
So how does it impact your affordability at Apollo hospitals, both from the consumer end and, of course, profitability at your P&L level as well?
No, I think this is something that we'll work out over the next few days, because you also want to pass on benefits as to the consumer. And I think the international one, where we're looking at 10% of our revenues coming from international patients, definitely affordability for them is an issue, and this will make India more affordable.
Ms. Reddy, specifically, what you reiterated earlier, GST on medical equipments, the fact that it's been reduced from the earlier 12% to now 5%, tell me, how does it reduce the overall cost for hospitals such as yours?
So if you're looking at consumables, I think it's about 10% of revenue. And there, when you see the GST coming down, I think there should be an improvement in our overall cost matrix. And therefore, we need to see how much it is and what impact it is. Right now, it's just come to us, and I must say that we're very pleased to see it. But we will work out the numbers. I'm sure it'll be good for the industry as well as for the patients.
It sure is. And one can see that in all the smiles of all the consumers and, of course, businesses such as yours as well. Great having you on the show today, Ms. Reddy.
Thank you. I just
so
wanted
much.
to clarify
Yes.
that this is for consumables and disposables. Medical equipment still attracts a duty, and probably that will be a part of our next conversation with the ministry.
Here's to GST 3.0. Shall we say that?
Yes. Thank you. Thank you.
Okay, thank you for your time. Well, Apollo Hospitals, one of the key gainers in trade today. That's not the case with the rest of the market, though. I just want to point out some of the losers from within the broader end of the market. Exide, Paytm, Mahindra Finance. These are some of your key pressure points from within the broader markets. We'll take a very quick break on that note. We'll continue tracking markets.
Right now, and like Asha was highlighting just a few minutes ago, we fizzled off quite a lot from the day's high. Very flat on the Nifty with only a hint of a positive bias as we speak. 24,735 is where we are at. Sensex 2 fizzled down, 0.2% uptick coming in. Nifty Bank absolutely at that flat line and just close to that 54,100 mark. Even the broader end of the market today is not showing too much of resilience. In fact, big cuts coming in on that front. Mid cap is lower by 0.6 or almost 0.7%. You also have the Nifty small cap space that's about down about 0.7% as well. But it's select names that continue to hold on to gains. Case in point being M&M, that's up 6%. Bajaj Finance on the back of the GST rejig and now hopes for more credit to consumers. 4.5% higher is where Bajaj Finance is. So is Apollo Hospitals, Bajaj Finserv, Neste, Grasim, ITC and Trent. These are some of your gainers in today's trade. On the flip side, what's weighing heavy on the index, surprisingly, it's a staples name, Tata Consumer. A 3% cut coming in on that stock. HDFC Life, Maruti Suzuki, Wipro, IndusInd Bank, BEL, HCL Tech. These are your top losers from the Nifty 50 group of stocks. But we have touched upon the impact of GST on staples, on textiles, on insurance. We've done all of that over the course of the day. Time now to get an understanding on what the impact could be on real estate and especially the retail real estate and what the impact could be over there. We have Pushpa Bector, Senior Executive Director and Business Head at DLF Retail, joining us on the show. And Pushpa, hi, good afternoon and thank you for your time today. First up, help us understand, how do you see retail demand shaping up in the next few quarters now that we have this GST bazooka that's boosting consumer sentiment?
Well, I think it's a very welcome move by the government. Certainly, this will put in more money in the hands of the consumer, and hence disposable income will improve, discretionary spends will increase. We do welcome it. And we also think that, this will give a sentimental boost to consumers. And they will be in a situation of wanting to consume. And the festive season is the right time that the government has chosen. So we do believe that Q3, whatever we had projected and predicted, we hope to do better.
Oh, absolutely. But Pushpa, with the festive season now approaching, what kind of an uplift in footfalls and tenant sales are you projecting?
Well, we had projected around 10% growth in sales on a conservative basis. Let's say this one gives us the boost, and probably it'll be double digits this time for the festive season. also remember that this time the festive season is going to be elongated. And well, we are looking at an onset of an early winter. So both these things are very good for consumption, especially in organized retail. You know, a long festive period, long winter, as well as the fact that there's going to be a GST bonanza by the government. So the three components should definitely help aid in boosting the sentiment as well as consumption.
Indeed, but Pushpa, what's the current occupancy level in your portfolio, and how sustainable is that, and what sort of a growth pickup are you expecting in that number?
Well, our occupancy, knock on wood, has been 98%. And from a leasing point of view, we do believe that even the number of stores that are open, you know, we've opened many new stores across our portfolio, and it should be around 97 to 98% by festive season. So yes, it's a full house.
Right, okay. And Pushpa, also help us understand in terms of segments. Are you seeing any shift in demand, or do you expect to see any shift in demand between premium luxury retail and mass market categories in your malls now that we have this rate rationalization?
Well, you know, see, luxury has always, as you know, been insular to either pandemic or resurgence of, post-pandemic. It's been insular. So we do think that by and large, it should be insular to the impact of GST. And I'm sure the government has put in some thought towards that. On the other hand, say a Mall of India, I would definitely look at an impact, a boost, because you have a wider demographic reach there, and the brands are also wider in nature. There are, you know, in terms of pricing. So I do think that brands will get a lot of benefit passed on, and hence there will be, you know, pricing drop by a few brands, and definitely the consumers are going to be having a good time during the season. So yes, if I don't look at any category specific nuances as yet, but it's too early to say. But at an outset, I don't see a category bonanza, you know, any nuance.
Right. Okay. You don't, Pushpa, sense at all that luxury, given that that's in the highest GST bracket, is going to get hit?
See, I have been talking to a few of the luxury brands, and their broad thinking is whenever they have had these, let's say, luxury cess introduced, or many other such, GST introduction, etc., they hadn't really seen a big impact, maybe in the short term, but thankfully, since it's in the festive season, I do think that that would tidy over. One point I'd like to make is that handicraft, which means handmade garments, like the designer labels, which are craftsman oriented, that we do believe should be in the lower category because it will impact the artisans. And I'm sure the industry bodies will get together to make the right representation, because that would be only right for the craftsmen to benefit and also the customers to benefit. Only handicrafts, we do think that that could have a relook, but I'm sure the government will view it in the right spirit.
Well, yes, indeed. But with this, we let you go on that. Pushpa, thank you so much for taking the time out and speaking with us this afternoon.
Pleasure. Pleasure is all mine. See you.
All right, time now to once again slip into a very short break. Just a few minutes left before we should show with lots to talk about, but we'll do all of that after this quick break. Welcome back, and now let me welcome Shailesh Chandra, President CM, on the show right now. And Mr. Chandra, thank you so much for taking the time out and speaking with us. Indeed, a big news coming in for the auto industry, but how do you view this GST cut to boost the demand for the auto sector and EVs? For that segment as well, there was some bit of an uncertainty that was around, but the tax rate remains unchanged at 5%. How can it bring the fillip back to the industry?
Yeah, so, first, I think this is a landmark decision and a massive transformation by the government of India. And we wholeheartedly welcome this step. we believe that reducing the GST rates in the auto categories from 28 to 31% to down to 18% in that category, and the category of 43% to 50% coming down to 40% is going to significantly boost the demand, and especially it is coming ahead of the festive period, so it should have even a greater boost, which was very much required for all the categories of automotive. So it's a welcome step. As far as the demand for entry cars and SUVs are concerned, I think both the categories are going to benefit. But I think the real demand addition is going to happen in the entry level segment, where the affordability is critical for the first time buyers and the middle income group. So we are going to see definitely a bigger boost there. An real addition of demand is going to happen there. But also given that, the SUV prices will also come down because of general GST rates coming down anywhere between 3 to 50, 3 to 10%, depending on the segment of the vehicle in greater than 4 meter. That segment is also going to see a boost. And generally, people who are today in the market will, with the same budget, will be able to afford a higher segment car. So we'll have to wait and watch, but this is the general commentary I would like to make. As far as EVs are concerned, I think continuing the 5% GST rate is a big signal and commitment by the government towards zero emission technology. And more importantly, it gives the signal of policy stability. So it's a welcome move. And we have already been seeing significant traction in the EV segment. We have been seeing more than 100% growth. I think that, with 5% GST sustaining as a rate, it should continue to see a transformative growth going forward.
Right. Shailesh, the other question is what happens to the compensation cess already on the books, right? Do you see clarity emerging on how that will be adjusted for by OEMs and dealers? And what possibly are the dealers looking for? Any possible measures that can be taken?
This is one thing which I think has not come out clearly. While as SIAM, we have given a request to the government to come with some kind of a transitionary mechanism to deal with this situation. So I think we'll wait for clarification on this, and we'll continue to engage with the government as far as this issue is concerned. But right now, there is absence of clarity on cess.
Okay, and Mr. Chandra, with GST now at 18%, do you expect stronger replacement demand as well as first-time buyers returning in larger numbers?
Absolutely. And as I said, that the biggest boost is going to come on the entry side and first-time buyers, because there would be many of such buyers who are not considering buying a car because it was out of their budget. And with 10% reduction, which means for a 5 lakh car, this would be nearly a 50,000 kind of a reduction, and that might fall in the budget of many customers who are not even thinking. So there will be addition coming, on the entry side for sure. And the same would be for two-wheelers, I would say, where this is a significant reduction of 10%.
Right, Shailesh, thank you so much for your time. Great to have you on the show. Just counting down to the market close, let me also bring on board Arpit Beriwal. Arpit, quite disappointing, right? I mean, almost a 200-point move up, and then it's completely given up its gains. What's the Nifty trade?
So looking at the overall market setup, index has got stuck in a range. So we have been seeing from the last almost couple of weeks that index is trading in a range between 24,400 to 25,000. But looking at the overall setup wise, definitely stock specific action is likely to continue. And our stance is that till Nifty holds above 24,550 levels on the spot basis, our stance would be positive for an upside move towards 24,850, 25,000. But at the same time, we have to keep one thing in mind, that index is relatively very dull because very sector specific action is seen. But overall, our bias will be positive till it holds about 24,600 levels for an upside move towards 25,000.
Arpit, is there anything that you would short in the market at these levels?
Looking at the overall sector specific, so our stance is that defense and railways are relatively weak, and we have been from the last couple of weeks we have been overall bearish bets on the defense and the railway. So I think looking at the setup wise, particularly railway sector is overall weak. If we look at the chart structure of IRFC, IRCON, RVNL, RailTel, all stocks are overall weak. Along with that, within the defense, BTL, HAL, BL also looks weak. So I think positionally from here on, definitely these two sectors can be there on the bearish side, and from here on we can see expect good 5 to 7% correction in selected counters within the sector.
Okay, and Arpit, help us understand this kind of move that we're seeing on the market. Largely a lot of these GST announcements were priced in, but we did start on a positive note. How much of this subduedness is due to the BSE sensex expiry being today? How has that played out for the market?
So definitely there are a couple of factors that are going on currently. So first is the Sensex new expiry that was shifted on Thursday. Along with that, there was a positive sentiment across the GST sentiment related sectors. So that news has already priced in by the gap up opening. But having said that, although we have seen a dull movement from the morning tick overall, but the good part is that it is still holding above 24,600, 650 levels. So I think from here on, rather than looking at the index perspective, it will be a more sector specific approach and a stock specific approach. So you have to focus in the sectors that are relatively looking good, and we can go on a long and short bets. Overall sector wise, new age companies, auto and selective healthcare looks positive side, whereas on the short side, defense and railways relatively looks weak.
Okay, Arpit, leave us with your stock ideas too.
Yeah. So overall, looking at the market breadth, there are a couple of ideas that are still holding well. First would be from the cable space, KEI Industries. So looking at the overall chart split of KEI Industries, range breakout on the weekly scale above 4,050 levels. In spite of market weakness, it is holding its gains. Looking overall, the setup very strong. So one can go long with stop loss of 4,020 for an upside move towards 4,300 levels. Second would be from a gold finance sector, and that is Muthoot Finance. So overall, the chart structure is very strong. Today also made a new life high. Managed to surpass its previous swing high of 28.5, holding well. A range breakout on the daily and the weekly scale looks good for new life high towards 2,900 levels with keeping stop loss of 2780.
Okay, Arpit, thanks so much for sharing your take on the markets and your stock specific recommendations. We're well